Perfect. So, see, the today what we are discussing about the expenses and budgets, it is still very basic because this is too wide subject to cover in another, maybe in 30 minutes or 20 minutes. But still, I've tried to give the glimpse of that, what exactly you need to manage when you are thinking about expenses and budget. So, we'll start with the very basics thing. When we think about expenses, we must know what kind of a normal type of expenses basis on what we are normally booking our accounts. So these are the four important factors under this category. We normally book our accounts and our expenses. One is the fixed one. So normally when we know that key something which is going to be 100% sure expense for the month, which is fixed for every month, so we are considering that as a fixed expenses for the month, for the year, for the whatever period you are declaring that. Second is your recurring, like there are so many recurring expenses. Maybe you can consider where rent is something like a recurring, salaries are something like a recurring. So you know that every month you have to pay this, but not necessarily those are fixed. It may vary or get fluctuate basis on the conditions and whatever plans and structure you have. So one is the fixed one, another is the recurring one, and third is the variable one, like your electricity bill, light bill, and those you know that these are fixed. These are more kind of a regular expenses, but those are going to be a variable. Depends on the consumption, depend on the maybe whatever actions you are taking. Basis on that, it will vary, keep on varying. So maybe in some of the month, if you are increasing some more labors, you are getting more variable cost. In some cases, like if you have offices, if you have electricity bill, light bill, water bill, so it will be always in a variable form because it is all depends on the consumption. And there is another more like a miscellaneous expenses where you can say it is need based because which is not planned, but as and when there is a situations basis on that you decide, you approve and take this expenses. So normally your book should be structured in such four format where you should segregate and understand which is your 100% fixed, recurring one, variable one, and the need based one. Why this is required? Because once you start analyzing your books, once you start analyzing and understanding which expenses are really important for your books and which you can really curtail down or you can take right decision, for that the basic structuring is very important to understand, to segregate that data. So once you have this kind of a grouping, it will always help for you to monitor at the right level. So this is first you need to work on. Then the second one, you have to understand what all expenses or heads will be coming in your respective company or respective project. Now it may vary basis on the size of the company, basis on the category of the company, whatever services you are doing or product you are doing. So that all depend on the type of company. But more or less, this will be kind of heads which you will normally keep in your accounts. Like when you say cost of good sales, that means when you start something to create as a product, so whatever from the right raw material procurement to convert that into a finished good, so till that time you can consider that as a cost of good sold. So that is something to be called as a one head. Second major cost or major your category is your operating expenses. Under this all operating expenses, you can segregate and you can keep different groups also here. Maybe the manpower cost you can separate it, you can make a advertising marketing separate. So you can even make a subgroup here to have more better understanding about your operating expenses because that is going to contribute the biggest pie of your whole expenses. Then the financial expenses, like whatever interest or bank loan or whatever loans you are taking, any kind of a interest you are paying, any fees you are paying, those all kind of a financial expenses. Maybe you are giving the fees to your CA, you are paying interest to the bank. So those all financial expenses will come here. Extraordinary expenses in some of the situations where in particular month, if you are doing any kind of a big expense which required a management approval, which required a complete a different approach. So maybe one time cost, but it is going to be a special event or something substantially on particular month you are doing it. So it is not going to impact in your trend. May in some of the month it is going to be an additional cost for that particular month. So that is extraordinary expenses. May you can keep that separate. So you will be easily able to identify that for what purpose this expenses got shoot up. Then non-operating expenses means there are a lot of such activities like when we are doing any kind of a activities for our staff, maybe some incentives you are giving, some kind of activities you are doing in office, which is not related to the operation, but there are some expenses you are paying something as to some labors or something, some incentive, anything. So anything which is miscellaneous and which is unplanned, may you can put it here. So these are the major heads and category. So I always suggest everyone, when you start looking your books, you should always stabilize your all heads from the day one. And if you are keeping that heads for the first year, continue that heads for at least 3 4 years to at least keep the monitoring on the track. Otherwise, lot of time even I did the same mistake. Every year we used to keep the heads, and then when we are comparing that heads year wise, then we are not able to really figure it out which head is really giving a more pie of dent or challenges to us. So always keep heads very clear, categorization to be done very specific, and this will help you to analyze and at the same time portray and place your all statistics very well when you are making your plans or for the investor pitch or for the banking purpose. So have all heads very static always. Now the account has been managed. Consider that you are all capturing all information, because when you want to analyze something, the basic information capture, if you are not capturing the right information, you won't be able to analyze anything from it. So the first entry point is very important. So you have to really structure it well. Now come to the expenses analytic part. So how and what all we need to really figure it out, and what all we need to monitor. First important thing is we need to really understand what kind of a ratio we are really allocating or having an expense as a ratio in our buckets. Now consider if you are just spending 2 lakh rupees for a month. I know this is just an example. So you must know that whatever spend you are giving on that particular or respective hedge, so what is the contribution that is giving to the whole total. So this is simple formula. You take the whole total and just have a ratio of it. You will come to know that what is the major contributor you have in your books, which is really impacting your all expenses or your cost and everything. So that this ratio will be always good for your membranes also. And rather looking for a value, it's always good to see a ratio that will give you a more clear indication about your expense plus and minuses. But for this, you need to have your budgets, and then you can really compare your actuals, because unless you are not budgeting it, then against what you are really finding as either it is a plus or minus, that all depends on, in case if you are not considering, if like in case if you are running for a 100 kilometers 100-meter race. So if you are not keeping a finishing line, then of course it is really difficult to judge that who is finishing the first one. So better have that cross line. That finishing line is very important. That is something we call budgeting. We'll talk about that in a later slide. So this is very important, that ratio to be very precisely considered, not the value. Then you have to know that which are those your expenses are really a good contributor or a bad contributor. When we say a contributor, it is very important that what kind of a ratio you are contributing to your whole expense. That is one factor to understand. But at the same time, which is that all good contributor who is really helping you to grow or giving a dent in your whole plan. So you have to calculate the cost per unit sales to understand which expenses is really contributing what value for your whole sales. And how that will be calculated? Very simple. You have to see what kind of a total revenue you are creating for the month. Total revenue divided by the total expenses for that particular head, and divided by total number of sales unit what you have done. So you will come to know what exact cost you are spending for 1 unit sales. That will give you an indicator that which is the cost is really going high for you. Either your rent is really going high, either your manpower cost is very high for per unit cost. Then basis on that you can really decide either my rental cost is really going high or it is really required or not. Lot of time when we are thinking about we should have a big office, we should have a good manpower and everything, but when your per cost is increasing and you are not able to manage it with what exactly that cost is contributing in your sales, that is a big problem. So we should have that very clear indicator that what max the unit per cost should be spent on per sale. So then you will clearly understand that where we are leaking, where we are having a dent on the whole sales part. Okay, that is one thing. Then once you have a complete analysis. You have the contributor who is going to contribute it, you have a ratio, you have a contributor, and then we need to really understand the trend. Either we are, and every month we are doing the all monitoring well and where the trend is going, and for that we need to really make the month wise all our this ratio and contributor analysis, and basis on that we will see that which is the culprit cost which is really impacting and denting your whole business model. So that's how you can really structure your all this total expense analysis. When you are talking about the whole three part, you have to really figure it out. What is the expense ratio you have? So if you have a budget, then only you can really see what kind of a ratio you are achieving or not achieving. When you are having a contributor, you will know that either my per unit cost is really workable or not workable. Consider like if your per cost per unit for the manpower is really going very high, you will come to know that I need to reduce down it, irrespective what kind of a value that expense is contributing. But if it is not affordable and if it is not fitting in your criteria, you need to take a right call for that. Similarly, when you are observing your trend, you will come to know which are the major culprit areas where you can really cut down. So basis on your all experiences, or maybe at what stage your business is, you have to put your scheduler on the monitoring purpose. Maybe like expense ratio, you have to really observe every week, so you know that where the things are moving every week, so you can take the right decision at the right time. Contributor, at least in a month you should observe which is the per unit cost which is really impacting on your business, so you can take the right decisions on it and move ahead. And trend, of course, quarterly you need to work out. So every quarter, if your team is sitting and observing which is that important factors, or those are the culprit costs which are really impacting your business, so you can take the right decisions on this. So this is something which we also do, and I think I'm also suggesting everyone to start such kind of activity. Now at the last, we should when we are talking about budgeting, what exactly budgeting means? It's simple method. It's something which is nothing to be taken as a very scientific method. Something like we normally keep all our expenses in one single bucket nowadays, because when we give it to the CEO, CA, he make their all heads, and whatever heads they are creating, they are putting everything in one single bucket. Now, budgeting means what? Either you can have multiple jars, like in case if you have all the expenses and consider all the jars having a one single size, all are in a uniform same sizes. So possibly you will not be able to figure it out where actually the more cost is going. Better rather having all similar jars, better keep a fixed jars of a different sizes. So you know that on your budget. So this is the something which you are defined it from the day one, that I'm going to spend this much only for this activity. So that is going to be your budget, and basis on that you will be able to easily analyze that what I had given and allocated for that specific head. Now either that is under assumption, means whatever you assumed it is under that, or it is matching it, or may it is overflowing. So your CRM, your systems, or even if you are managing on the Excel sheet, you will come to know that anything, any expenses going above what you are assumed, that is something you have to really work on immediately, take the right corrective actions and move ahead. But in case if you are not observing it, that means you are not keeping any kind of if you are not drawing any line, then of course it is all you are keeping open ended and there is no control on it. But if you defined it, okay, like rent is going to be this percentage only. So normally in my company, we don't keep it in a values. We normally we keep our budgeting on the ratio basis. So we know that in case if we are doing this much revenue, so my budget of salaries should not cross more than 20%. My rent should not cross 3%, 4%. My marketing cost should not exceed 25%. So it all depends on the nature of whatever activity or whatever business you have. But you should define it, okay, from the day one, that start of the month I will not spend more than this, and keep monitoring on it on a regular basis. You will come to know either you are under assumption, or you are matching the numbers, or you are overflowing on that. So if you are controlling on expenses, you will get your profitability much better. Rather, we are working for 2 months, 3 months, 6 months, and later on, if you are not working on a budgeting, then you are something working on only expenses. Because see, budget is something planning. If you are doing budgeting, means you are planning and you are structuring your whole expenses in a very right format, and you are going to monitor it for a regular process. But if you are going to work on your expenses, so you are not working on expenses, you are working on a damage control. Means after a month, if you are spending your time and taking efforts to understand where the things have gone, so for that particular month, you have already lost your money. So better have a budgeting done properly and then work on your actual facts. That will help you to understand either your assumptions was really well enough planned, or how you are really going to take a right decisions based on your right information and facts. So this is something which I suggest. Expenses are important factor. Don't simply look for a option that something will happen great and some big money will come in, then only I will set this all business plans. Actually, I always say, when you want to give culture and value to anyone, that should be start from the scratch. Because once the and a person grow at teenage stage, or on a age level, you cannot change anyone's attitude. It's better whatever culture and values you want to inculcate in your company, you have to give from the start. You have to lead and give that all from the top level. Then only you will find all that discipline and 100% what you are expecting the plans and everything to be executed as per your vision plan. Okay, so this is all about expense and budget. I will be opening Q for a QA session, and we can take one-to-one QA. Okay, which formula you want to repeat, Srinivasan? I hope you must be asking for a, just a minute, I will allow to open the mic. And now I'll change my mic also. So you must be asking about per cost unit, if I'm not wrong. So total revenue, just you are asking about per cost unit formula, that is total revenue divided by the respective head expense divided by number of units sold for that particular month. So you will come to know that the unit cost per what you are spent out of that category. Okay, so you must know that how much percentage of value you are adding or you are spending for, from that category to get your that sales. So now a lot of people are doing, few people are doing on the sales basis. They consider whatever sold unit sold basis on that they are booking, or even lot of companies are doing on the production side also. So whatever productions they do, basis on they try to calculate the cost of unit. So that depends on the service, that depends on the type of company, or how you want to book the, or how you want to analyze it. If you are a manufacturer and if you know that you would be having a lot of huge stock lying with you, then of course you have to work on the production side. And if you are on a service side, or if you are not into where your stock is not going to be parked with you, in that case you can really work on this. Okay, type of expenses. Okay, just a minute. See, again, the type of expenses what I have taken here, that is not the final one. This is again more like a samples. Okay, so this is something more like a sample, but you can take it as a reference. So when we say the cost of,
so actually I wanted to see,
okay,
sir, I wanted to see the slides before this.
before this, okay, there was nothing much.
Yes, okay, I'd actually lost the connection then. Okay, okay.
Okay, so it was only one slide where we mentioned about the type of expenses. One is the fixed one, recurring one, variable, and the need-based one. So normally, whatever expenses we are booking, so we try to keep a different groups, so we can easily identify or keep the segregation well about our this one. So when we are thinking about fixed, we know that in the fixed cases normally we cannot take much decisions, because those we are agreeing on, these are going to be a fixed one for the period. But variable expenses or need-based expenses, we can monitor on a regular basis, and we can take the corrective actions to either vanish it or maybe at least reduce it. So if you are having this category and grouping, it will help you to really analyze that.
Okay, sir. Thank you so much.
Okay. Okay. What else? Any more questions, guys? Just a minute. Okay. Okay, so the formula I have already repeated. I hope you people have understood the whole thought process, what I was trying to say, because expenses is something we normally take it very casually many times. We think, okay, let's focus on the sales side. So major our focus is always on the sales part, and we always put maximum efforts on making and generating revenue. But at the same time, equally, you have to put your focus managing your expenses also, analyzing your expenses also, because and smart people always say, if you are not able to increase your sales, better you reduce your cost. So at least your profitability, because end goal is what? To have a better profitability. So if you are managing your profitability is good, still okay. Even if your sales is not increasing for a particular period, but if you are curtailing down your expenses and you know that what kind of a ratio you are contributing to get that kind of a sales, many times even if when you are getting good revenue, but if still at that particular situation, if you are really spending high, so obviously in a longer term possibly you will lose your pie, or maybe you will be not in position, you will not find that space to compete with your competition. So you have to really understand what kind of a ratio expenses you are spending and what kind of a contributor you have, which is really adding value to your sales or giving dent to your sales. That is very important factor, and that will only come when you will really structure your all accounts in a proper heads. You will analyze the whole trend, and you will find that all culprit where the things are moving wrong for you. And you must be surprised to see, because I don't know either, because I worked with automobile companies like LML and Kinetic also. So when I used to sit in their board meeting, the company not used to take a big decisions on big costs. They used to find a very small items which is really contributing high on the whole part. So we used to figure it out the items like a screw. So we used to find, okay, the screw is costing 1 rupee. So we used to discuss that in case if we can find some vendor who can give this, who can reduce that 1 rupee to maybe 90 paisa. So 10 paisa is the cost saved, but that 10 paisa used to save huge cost because it was volume contributing very high. So many times we consider that the small items are not giving big impact, but actually the smaller items and sometimes hidden items, those who are not in a focus area, those are really major dent and creators in the whole books. So we have to keep that all trend and contributor elements in our monitoring motive, so we can really take the right decisions at the right time. That is something which we do, and those who are really building their company and starting their whole venture, you should have all these practices and discipline your company from the day one, monitoring on accounts on weekly basis, on monthly basis and quarterly basis, and every meeting should have some motive and objective behind it, rather just looking as a random review. You should have some motive and agenda behind. Okay, every month when you are thinking you want to review, so in maybe at weekly when you are thinking, maybe you can simply review either the whole budget is matching or not, but every month you should have that agenda, that how to reduce cost. How, if my manpower cost is this, how can I either I can reduce that cost, or I can see that per unit cost how can I reduce, and for that you have to give more sales numbers to the people. So contribution is also important. Then manufacturing sector, we should maintain the expenses trend in production side as well as other expenses also. Yeah, of course. So in manufacturing sides, we know that the whole game plan is different, because they are not their capital cost is very high, so their procurement cost is very high. So here, rather doing on a sales basis, it's always better to work on a production cost basis. So you know that the per unit production cost and what is the contributor you have per production. If you are per unit cost, if you are calculating, you will come to know that where the things are moving plus and minus. But for a regular businesses, I think on the revenue is much better. Okay. Uh-huh. Again, it depends on your business to business. It all varies. There is there is even expenses. How to book expenses, either on a cash basis or on a accrual basis. Again, it depends on your business expectations. So there is a method, like in case there are people who say when I will collect money, when I will pay money, that time I will book the expenses. Okay, and there is another accrual basis ki in whatever invoice has been given to me, basis on that I will book my accounts. So those are different accounting methods, but that all depend on what kind of a accounting methods you want to take it. But in both the situation, fundamental will remain same. A motive is what? To see that either what kind of a budgeting you have, you are matching with it, what kind of a per unit cost you want to see that this, which cost is really contributing to your revenue and profits, and the trend. The culprit to be fined and take the right decision. Okay. Okay. So any more questions, guys? I was expecting very, because this subject was bit exciting subject for the entrepreneurs, because normally people are really keen to know about expenses part. Yeah, please go ahead.
Karan this side.
Yeah, correct.
Sir, actually, I have taken down examples for in types of expenses like recurring.
Hmm.
Okay, so actually, I was a bit confused about what is a fixed expense.
See, there is very thin line between fixed and a recurring. So recurring is something where you know that every month you are going to pay it. But fixed is something which is not going to be a variable at all. See, there are a lot of people are not even they only consider fixed one and variable one, and there is miscellaneous only three category. In our case, we normally do this in four format because we know that when we are seeing fixed, so every month, irrespective, my rent is going to be remain same. Agree? Because rent is not going to change, but my
Yeah.
manpower cost may vary because that all depends on the attendance. Okay, so that is recurring cost, but again it is going to be a variable in some slight way because it is going to be a cost, but may because of the attendance or maybe the new hiring or some people going, so there will be some variation. So we segregate that. So fixed is something there is nothing which we can say plus minus is going to happen. Recurring is something which is every month going to be booked, but then there may be possibility of some variation.
Sir, actually, I wanted to say something.
Yeah, please.
Suppose, like, if we want to start a business, let's take a suppose take a business of making fast food.
Ah.
So, can we consider fixed cost in the sense the money which you are spending in like buying the utensils or
No,
else
no.
something like that?
No, no, that is not your expense, that is your capital. Because see, asset is something separate, expenses are something which is used for the monthly operational purpose. Okay. So there is different segment in accounting. One is something which you are investing a capital to purchase your assets. And if you are giving something as a deposit to your rent for your landlord, so that is going to be your deposit, which is going to be more like a assets and deposit in your company. So that is different cost. That will always come in a different slot in your balance sheet. That will show as an asset. Like if you are purchasing, maybe you are purchasing mobile for yourself in on a company account. That is the asset for the company. That is not expense. That is
Okay.
asset. But when you know that there is a expense on every month, like your rent, like the production cost will be always there in a month. There will be a electricity bill every month. There will be a light bill every month. There will be a manpower, advertisement,
Yeah.
that. So those are regular operational costs.
Hmm.
Okay, so those are expenses. Those are directly impacting on your regular sales. Like
Yes.
what you are procuring, that is going to be one-time cost. So you are going to procure it, that is going to remain with you for a time, maybe 1 year, 2 year, 3 years, whatever life cycle that product does have. But that is going to remain as a asset. And even in that also there is a depreciation. Means in case if you are purchasing a mobile, may you are and you purchase the mobile at cost of 10,000 rupees, so you cannot book that on every year. So you will be taking a depreciation. So there is a rules given by the law that what kind of a depreciation percentage you can consider basis on the category and basis on the assets which you are purchasing. So electronic, they have a different method, different law. For physical product machinery, they have a different thing. So basis on that, CA is normally doing that part. Okay.
Yes, sir.
Let's not confuse with that. So asset and capital is separate. Expenses are something separate.
Yeah.
Hmm.
But sir, still, I am a bit confused to know like what would be my fixed cost if I want to calculate something.
So, like for example, like I mentioned that your rent is going to be a fixed cost. That is going to be 100% fixed cost for your month. So you cannot change every month, right? Irrespective, even if you are going only 20 days in that place, still the landlord is not going to reduce your rental for that particular month. So that is going to be a fixed cost.
So whereas coming,
Yeah, even in
sorry.
case if you sorry, so in case if you are giving any outsourcing solution to the for some activity, consider like for digital marketing, you are hired someone where you are going to give a fixed 30,000 rupees every month. So that is going to be a fixed one.
Yes, sir.
But in case if you have any other expenses where like a manpower cost, marketing cost, advertising cost, or traveling cost, logistic cost, those are going to be a fixed cost. Every month it is going to be come in books, but every month it will vary depend on the consumption. So
Okay,
you can segregate that. Yeah.
the cost which will be varying, we can take it as a recurring cost.
Recurring cost, recurring, but every month it is going to come.
Yeah, but it may vary, but it will come.
Absolutely.
Yeah. Thank you. It was a very small, thin difference. Thanks for making me understand.
Yeah. But in a later stage, that help you to really segregate that, and because see, normally when you will start analyzing all your data, so you need to have that segregation very clearly in your mind that okay, fixed cost I cannot do anything because fixed cost is already agreed on terms. You must be having an agreement with the people, and for that terms you are already fixed it. But you have variable cost in your hand, you have miscellaneous cost in your hand. So if you simply categorize it, so you can only focus on that specific area and take a right decision on it, how to reduce it.
Yeah.
Fixed cost could be something where you are sitting on a quarterly basis and taking a hard calls on that. Okay, yeah, maybe the business is not going well. Possibly we need to talk to the landlord and may either we can hand over back to him or we can request him to reduce the rent. So that is a bigger call. That you cannot take that on a regular process. So that's a big call.
Yes, sir.
So that for that purpose, the segregation is helpful.
Yeah. Thank you. Thank you, sir. Thank you very much.
Yeah. Fixed cost like investment in plant, machinery, infrastructure. No. Fixed आदेश fixed cost देखो ना बुक्स में अलग अलग होता है. Fixed cost is something हम expenses की बात कर रहे हैं, हम capital की बात नहीं कर रहे हैं. Expenses which you are spending to generate your revenue, that should be considered like an expense. And when you establish company, you require some capital to be spent as a infrastructure cost. This is going to be spent from my end, so that remains separate in your books. वो अलग हो जाता है because that is something which you are spending to just establish or just build that company. So building a company is a separate activity. Running a company is a different activity. ओके तो जो आप खर्चा करते हो आपकी सेल्स जनरेट करने के लिए, वो कॉस्ट को एक्सपेंसेस कहा जाता है. और जो कंपनी बनाने के लिए आप अलग से कॉस्ट लगाते हो, जो एसेट्स होती हैं, प्लांट होता है, मशीनरी होती है, उसको हम लोग कैपिटल कॉस्ट अलग से कहते हैं या फिर एसेट कहते हैं. वो अलग हो गया क्योंकि एसेट के बेसिस पे आपकी कंपनी की वैल्यूएशन कैलकुलेट की जाती है, ना कि आपके एक्सपेंसेस और रेवेन्यू के बेसिस पे. आपकी कंपनी में वॉट एवर काइंड ऑफ एसेट्स यू हैव, कंसिडर इफ यू आर अ मैन्युफैक्चरिंग यूनिट, so even though if your company is in loss, possibly your cost of that land, cost of that building, cost of that machinery is a cost which company or any bank can recover back. वो बेच के उसका पैसा बनाया जा सकता है. So whatever assets you have, that is going to be a property of that company. So that could be in a multiple form. Either that could be a physical one, intellectual one, or maybe any kind of IT and software, all that comes in that part, and a soft and hard one. So all that is going to be considered like a asset. That is your company's property. Rest everything, जहाँ पे आप every month you are spending something to generate your revenue and sales, that is to be considered like a expense. Clear? These are very basic. These are two basic things to really figure it out. So that is why I'm always request every one of you, please try to learn how to read your accounts, try to learn how to read your balance sheet, because when you will sit across the investor, they will talk only about your balance sheet, because balance sheet is more like a health report of your company. And if you are not able to read your balance sheet, they will play with you like anything. They will speak something which you will not understand, and there all the things going to be ruled out. That is what normally happens when they invest. Okay.
Excuse me, sir.
Yeah, yeah.
Good evening, sir.
Yeah, good evening.
Sir, I have I work for a company which is in pharma since 6 years,
Mm-hmm.
and now there is a product called Wit and Rich. It's a chocolate brand, probiotic.
Okay.
Now, any product which comes into a market, it takes, say, the cycle for 1 year, 2 years, or 3 years.
Correct.
What I understand.
Mm-hmm.
But the company says, whatever, suppose they do the investment for the salaries or the rent or anything, the profit for that selling of goods is 10%.
Hmm.
So they are saying whatever the investment happens, it has to come, within 6 months or 1 year. How is possible such a thing?
So that is what normally budgeting comes in play. So when you are budgeting your plan, that time you decide that what kind of a spend you will do to generate the revenue or sales for the company. So whatever slots or whatever that heads you have created, you will allocate for that specific area. So you know that okay, I want to recover that my all spend what I have given for that project. So you know that where and everything I will spend it. In case if you are giving for the marketing, you should know that how it is going to contribute to your company. Okay. I think there is a lot of background noise from your end. So see, that is where the things what we were discussing here is we need to really understand not only what kind of a ratio we are spending for that particular for that respective head. Also, we need to understand what kind of a contribution that head is giving to generate that sales for your company or for that project. Normally, we are more focusing on the ratio basis that we know that this kind of a money we are spending, but either the contributor is really giving any value addition to it or not. That is very important factor to understand. Once you understand that factor, may in a right time you can really figure it out what to curtail down and where to spend more. In case if consider this project is been given to you for 6 months. Now for next 6 months, every month you are observing that I have been taken a marketing cost for maybe 20%, 25%. Okay, and I have also taken a cost of manpower maybe 20 to 25%. Now, if you see my cost of marketing is giving me per unit cost, maybe per unit cost is going very high. My manpower cost is per unit going very low. So possibly you can take a right call. Rather spending more on marketing, better I can spend more on manpower. So my sales will get increased. So that decision is making easy for you. Understood? So only trend
Yes, sir.
observation is only trend observation is not important. You have to understand what factor is really impacting on what your area. So basis on that you have to keep shuffling and doing the changes to your decision to get to the right fixed format for your that particular product.
Okay, sir. Sir, one more question. Now, this is the new product into the market. So, when I hire a staff, we give them a provision period of 3 months. Then they give them a appointment for the permanent.
Hmm.
But within that 3 months, if they are not able to perform, what decision we should take? How you calculate their performance?
So why 3 months? Even you have an opportunity to review them on a monthly basis or on a weekly basis also. Rather waiting for 3 months and then decide either things are happening on in your way or not. Better every week monitor them, try to guide them, help them to perform, and even after that also if they are not performing, then you are all eligible to take the decisions. See, any interns, any people you are hiring, so it's going to be a joint responsibility. You cannot simply expect that the people will join you and they will give you performance. It is always going to be a joint responsibility of company and the people. So people should be empowered, people should be trained. You should take the responsibility to train them, give them examples and prove that it is possible. And if you are able to perform it, they will also perform. So don't consider that I have hired a people and they should perform it. You should start with that thought process that I am going to hire people. I am going to prove as a concept, as a thought that I am going to make my sales happen through my team. And whatever process and system is required, I will set that. I will make sure that the people will work on the set program and they will get the results out of that. And keep that monitoring on a regular basis. Rather than just waiting, okay, I am giving 3 months to you and give me that magic. No one is going to turn and no one is going to give you any magical performances to you. So it's all depend to take a responsibility. So prove it to them. Ki, okay, 5 people been hired. Work with them, guide them, get the job done from them, or if they are not performing, help them to perform. And don't wait for 3 months. You should, as a startup, I think that should not be the right approach. Every week you should monitor, and every week you should sit and understand where the things are going wrong, take the corrective decisions, and then move ahead. If you even if you are taking a call in post month itself, that if you know that the person is not fit for your job, either you can switch his profile, or you can give him some alternate other job, or take a call. You should do that. You have to be practical enough for that. Okay, I think we lost him.
Uh,
Yeah.
Praful Saab, can I ask you a question? This is agree.
Yes, please, sir.
Okay. You see, we are in a web application development,
Okay.
and we have spent some money, and we are going to spend some more money.
Okay.
And what if anybody asks me, what is the valuation of your company?
Mm-hmm.
What should be my reply?
See, now you are talking from the investment perspective, if I'm not wrong.
Right, you are correct.
So there is two way where the valuation has been calculated. One, basis on the assets which you have. That is the normal conservative way, because when you are going to the CA, they will give you this formula that whatever assets you have in your balance sheet or in your books, basis on that they will say this is the valuation of your company. Second, when you are reaching to the investor, so your valuation will be always basis on your projections. So if you already have some proof of concept, if you have already done some businesses so far, you must be having some trend to prove it that on this value you are creating a business. This is going to be a profitability, and in case with the same profitability, if I go for next 3-4 years, I can make this kind of a revenue. Or what kind of a scale business model you have where you can say that if I am doing this business for a specific pocket, I can replicate with your help of your money to scale it to 1 to 100 or 1 to 50, whatever. So basis on your projection, you can put your valuation to the people. But again, when you give any kind of a valuation or any logical thought behind giving that value, you should have some facts and statistics to prove it. When you say I'm making a X kind of a top line or bottom line, you should have a proof that on what basis you are creating that top line and bottom line. If you have a bottom line in your hand, and if you are saying that today I may be doing X number and tomorrow I will do X10, so how you are going to reach that X10 with the help of that money, you have to be able to justify that fact. If you can justify that, you can get the valuation. Okay? So there is no set rule and regulation or a set formula. It is all depend on the negotiation and what kind of a confidence you can give it to the investors basis on what you are quoting to them. But again, with the facts, with the numbers, it always better.
So here, like in a manufacturing company or somewhere else, you have assets to show.
Absolutely.
Our assets are all intellectual property.
Correct.
The software is in the process of development.
Absolutely. So currently in service business, your projection and your intellectual property is something which you can claim as an asset. Okay. Even when I started my company, it was a service-based company. So I was having a zero asset value in my books when I started. There was not even single one asset. Even my mobile was also it was free for me. So that time it was only the projection which I have shown to the people that okay, today I have X clienteles. Basis on that X clientele, I am selling this kind of a units and I am making X percentage of profit. So if I take this profit and extend my projections from 1 city to 20 city, I may be able to do this number of business. But to scale that business to 20 cities, I required some more money. For what? Having a manpower, required some cost to have offices, because I need an infrastructure to manage all that offices and people. I would be expecting, I would be required laptops and maybe gadgets and everything as a cost and asset. So I have to prove that for what purpose I require that money. But you will portray your projection only basis on what currently you are doing.
Right, sir. Right, sir. Thank you. Thank
Yeah.
you. I will have more opportunities to
Yeah.
repeat the same question
Yeah.
as you progress more into, deeper into your intellectual.
Yeah, absolutely, sir. So we have already given the complete set of that step process. I will request if you go through that process, you will reach to that level also, where really we will work on your evaluation part also. So when we sit across the investors, if we know our facts and figures, then it is always good to negotiate with them. And even if it is on a basis on the valuation, only logics need to be very precisely conveyed and justifiable. If we have proof of justifications, everyone will accept that fact. It should be always digestible. Okay?
Okay, thank you very much.
Right. Thank you, son. Okay. Asif, what could be the way to approach angel investors other than investment meets and events? So, see, angel investors are someone, those who are in a individual professionals who want to invest money in their interest area. So, they normally call them angels. And now, gradually, since they are all professionals, so may they are getting associated with some agencies or some kind of a group where the group company is taking care of all the compliances and regulation part. Because investment is not an easy job where you can simply give a money in a personal capacity. Nowadays, there are so many compliances to be taken care. So these groups are taking care all that individually, due diligence part and understanding and evaluating the part that startup full things. So currently, if you are directly reaching, they will not consider as an angel partner, maybe, but as an individual one-to-one, you can always reach to the people. Okay. And process is nothing, and there is nothing. I got my funding on a very casual meeting. You must have heard from every people that you just need to reach to your right fit. But at the same time, when you are reaching to your investor, you need to really understand which all those investors are going to be suitable for your company. Because why investor will come and join your company? Because they also want to understand and want to be a partner in your company. So in two terms, they are getting benefit from you. One, maybe they are investing money and they are expecting some returns after some period. Second, if your business idea is something very relevant to their interest area or may contribute, your business can contribute to their businesses also. So you have to find that relevancy. If someone in from your similar segment, they will be more comfortable to listen to you because they will understand your language, they will understand your business well, so they can contribute also and they can really take the decisions at early stages. If you are going to someone those who are not from the IT background, and even if you are pitching him a great business model, still he will be hesitant to take a next call because he is not the right person for that, because he is always hesitant to take the decision because he will always expect some other people to really give that validation to him. So
Right.
find that right fit. That will help. That will help us. And second, don't go and spill over everything at one single stage. Better you have to plan your journey when you are reaching to the investor. And give them a teaser rather just going and pitching everything to him. Give them a small teaser to understand either he is really taking interest in your idea. Then look for an appointment. Look for an audience. Always prefer go in person and discuss your idea. Don't give presentations and only sliders online and expect that they will respond you back. It is never going to happen. If you really want investment from the investor, you have to create that bond. You have to meet him and impress him, not only just basis on your idea, but with your personality also. Because he is keen to know that who is going to be a partner in my company. He is more investing on you rather investing on your product. So create that one-to-one interaction and bonding with him. That will help. Okay?
Thank you, thank you, thank you.
Yeah, okay. Okay.
Hello, sir.
Yes.
I'm Zamil this sector.
Yeah, yes.
Sir, we are dealing with grocery delivery services. So the thing is, sir, how can we reduce the delivery expenses? The thing is, we used to hire delivery partners on the salary based, but it is difficult for us to cope up with that with their salaries because our sales are actually the sales are really less due to after COVID situation. So what do you suggest, sir?
So that's a call. So either you can look for other multiple options which is available in the market who can reduce down the cost and at the same time they ensure the similar quality and delivery. That is the one option. Or you
We
have to
tried,
increase your
but the quality is not that good. We tried third party delivery services,
Hmm.
but the
Because
quality, the response time is not that good.
So then there is another only one option where you have to increase the volume. There is no other option.
We are trying our best to increase the volume, sir. But the thing is, after COVID situation, the grocery delivery services are really had a dent.
Of course.
Because of that, we are not able to cope up. Because of that, we have to remove many delivery guys, and we are few delivery guys, so we will pay them per delivery charges. But they are not ready to accept it.
Obviously, it has to be affordable for them as well. Now you have to calculate
Yeah.
that cost pretty well. Either they are really making some money out of it. If you have some case studies to
Yeah.
prove them, then still you can convince them. But only expecting one because you want to reduce the cost is not going to be a brainer. No one is going to join for that, right? But in that
Yes.
case, of course, if your volume is less and even if you cannot afford the delivery channel, then you have to figure it out any other way out where how can you engage other people to get involved into to deliver your product. Maybe you
So
can.
we are trying to increase our sales volume, sir. But we are trying our best. But there is some problem in the market right now. Because of that, we are not able to cope up with them.
Grocery market, you are saying problem. I think then in the COVID period, grocery sales is the biggest higher contributor.
Yeah, we made a lot of sales during the COVID. During the first 3 months, we made a lot of sales. Sir. We were able to manage everything. We got the permission for the delivery guys. We were able to manage everything. But after 3 months, we got a big dent.
Then why you are not able to retain your customer? You should more focus on that part first. Why you are not able to retain your consumers? Either you really captured all your customer base, how you are really expecting that those customers will come back to you. Make some efforts on that rather looking for a new consumer base. Making efforts through marketing. If you already have a database, try for the retargeting. Call them, understand why they are not going with you. Where the lack of confidence. Okay.
So there are two problems, sir. One is the delivery charges, and the second is what we are taking commission. The commission that we are getting, we are not able to manage our proper expenses. There is no proper profit from in grocery.
So that is your financial model. You are lacking on the financial model. Before moving ahead with the plan, you should make your chart. You should make your financial model first. Either you will be with all these facts can really make money. If you don't know how much is going to be spent and how much is going to be come in your pocket, rather doing business, better you work on your Excel sheet first. Either it is really workable or not.
Yeah, sir. We are trying to pivot our financial model also.
That's
But
so simple, yeah. That's nothing great because you have to simply know all the factors. You should know that what kind of a projected volume you can make it, what numbers can really currently you are doing. Take a conservative number. With that, what revenue is going to be happen. Then all factors, what is required is the expenses, and see that either in the bottom line you are having something in your hand or not. If even after that also, if you don't see anything in your hand and you consider that tomorrow something great will happen, don't do that kind of a business. You should have a cash positive business. Okay, even if it may be it could be something the money cash flow is not working for you. If you have a reserve money, you can really pour your pocket money and increase the business. But if it is not even cash positive and neither it is a profitable business, so make no sense to do efforts. At end of the day, your only volume is not going to give any fantasy to you because that is something which we always looked as a revenue. Okay, this is number I am doing it, but end goal is what to make money for yourself.
yes, sir.
I have more focus on the bottom line, not on the top line. Top line should be considered much later because first put your oxygen for yourself first, then think about
Yes,
others.
sir.
Right, similar way. So first you think how you will survive, then how you will sustain, and then how you will grow. Don't directly jump
The
on growth.
thing, yeah, the thing is, we thought that if it is possible for us, we'll spend how much we want in the starting. We'll think about the profit later on.
That is all basis on the assumption, and assumptions always
Yeah.
have a tendency to go on a plus and minus side. So neither you are monitoring it, neither you have the clear indication with you that you should at least have that very clear in your mind. Maybe for 6 months I will spend and burn this much. If you know that okay, I am going to burn this, still it is okay because it is aware. You are aware about the whole that burn. But if you have no idea what kind of a burn you are going to do, and if you are continuing with that, it is going to be a disastrous situation. So plus sit with your all people and understand that what kind of a business model we have, what kind of a commercial profitability we are going to make, and then think where you can really do the corrections. rather thinking about currently what you are doing. You are just trying to find out the easy solutions. Delivery cost कम कर देते हैं तो हो जाएगा मेरा काम. It is not going to come like that.
Yeah, Vinuraj sir. Yeah.
Yeah. So better take your good time and understand the business model first.
Okay. Thank you.
It will not take much time, maybe 1-2 days max, but it will open your all thought clearly where to move ahead.
Okay.
Yeah.
Okay. Thank you.
Okay, great. So in manufacturing sector, production side machinery is suddenly repaired and it required a maintenance cost for some months. So how it affects the expense ratio to other expenses. So like like we mentioned, we have already kept another slot where we say there is a variable cost. So it is going to be a variable cost, and there is a another segment when we say unexpected or unorganized cost also. So we know that there will be a maintenance cost. Sometimes something will happen. Some period you are doing any kind of an event, some kind of a activity you are doing for that particular month. So in that particular month, your expenses is going to shoot up, and your P&L is going to take a hit of that. Again, you have to play smartly on that. If you are really a smart person, then you really plan that well. You must be heard about budgeting part. So like we say budget, so you should have that budgets very clearly in your mind, that if you have budget for your all these activities, you know that for maintenance part, I would be required some kind of a money. So for that whole activity, you are parking some money, and then you are spending that as and when you require. And in that case, your P&L is not going to hit, because it is going to be hit from that particular budget. So you are going to be safe in that particular month. Okay. When we used to really go for a funding part, so we used to keep very close eye on this, that my graph of that sales and revenue profitability should not go up and down, because normal situation what we see, okay, in that particular month some extra expenses happen, so my P&L will go down. But we used to plan it such a way where my growth should always show like this. It should not go like up and down. So that you have to plan, and you have to play with that all your expenses. Okay. So that is something art you have to learn to portray and really structure your accounting in that way. Yes, Kiran, please go ahead.
Good evening, sir. My name is
Yeah.
Kiran.
Yes,
So
Kiran.
actually, I have a idea on technology products, sir. So
Mhm.
before going to an investor, I have a prototype also. So should I have any demo part, or can I explain my idea to the investor
No,
for
no.
the
See,
funding?
that is what we have created the whole program. So very important that whatever idea you have, so you may be having a prototype, that is a product, but we have to really understand what is the proposition you will give it to your consumers. So let's work on your all that project in precise way, where we will understand what is the objective you have for that whole project, what kind of a value proposition you are creating, how to create a vision statement for that all project you are giving to the people, then the sales pitch, then we will understand what kind of a survey and statistics you have to prove your prototyping and their performances, and then business modeling, commercial modeling. So have patience, go with the flow. I think that will give you a more clarity. See, for what purpose you have joined here? You want more clarity about every action what you are doing. So I always request 90 days. Go with my process which I have given to you, and after 90 days, whatever you say, I will listen to you. Agree?
Yes, sir. Thank you, sir.
Okay. So let's not jump, because normally we have that all tendency to jump from one to end. ना जैसे ही मूवी देखना शुरू करते हैं, I know that कि लास्ट में हीरो ये मर जाएगा. So that should not be basis on the assumption. So let's not assume. I know
Yes, sir.
whatever you are doing.
Before going to enter, investor, should I show the practical application, real-time application, or just I have to show all these?
No, no, no. Prototyping. In case if you are meeting one to one, I think no problem. I think you have to build that trust, and you should give that all faith and open up with all your thoughts, because no one is going to take run away with your project. Because building something is one whole exercise, and building an organization and running an organization is a different activity. So no one is going to fetch away easily. Yes, of course, but whenever you are going to the investors, ensure that you are signing an NDA, you are going through a right process, keep all the documentation, meetings and minutes in records. So whatever you are doing, don't go in a casual thought. So when you are going to meet investors, always create a calendar invite, or send a small mail. Ensure that whatever you discuss, make a minutes of meeting and send to him. This makes a lot of impact because they understand you are really serious about this and you value their time.
Okay.
Okay.
Thank you, sir.
So I missed some slides in starting. Can I get recording of the webinar? Of course, Asif. I think like we mentioned, and like we always share. So all the recordings and the presentation will be shared in the Learning Hub. You can download maybe tomorrow or max by end of tomorrow. We will upload the whole recording. Don't worry.
So I need a suggestion. The thing is, Zomato has stopped its grocery delivery services.
Hmm.
Zomato and Swiggy is not up to the mark with their grocery delivery services. They are creating their own Instamart platform with the dark stores to make a delivery of the grocery, like their own inventory system. So, we need a suggestion, sir. Like, should we continue doing our grocery delivery services, or should we shift to our own inventory system, our own store system?
So that again depends on individuals on a plan and what kind of a whole structure you want to create. Like it, and it is not going to happen that what you are planning on the day one it is going to run and execute in the way.
Yeah,
So you have to keep on evolving and understanding the market conditions. So like in case during this COVID period, Big Basket has really jumped from X to maybe 5x also.
yeah, sir.
And basis on that they have done multiple corrections also. Okay.
Yeah.
And during the same time, you must have observed like super basket and all small players have really grown well. But their business models are completely different. So we cannot say ki X is good or Y is wrong. Everything is good. Like we are democratic country, so we say ki democracy is the great thing. But China is not a democratic, but they are grown much better than us. So we cannot say ki that is not a right method. So it is good for them. What we have, it is good for us. Correct. So basis on what kind of a business model and what kind of a process you are going to develop to nurture that company or that organization make everything. So we cannot declare what is good and bad. And of course, Swiggy and everything because their focus is not on that category because they have started very casually. Like even Amazon, so like sorry Uber Eat they are doing their business, but their contribution and their revenue sharing for that business is very minimal. Okay. So there are so many things for this big giants. They are doing it for multiple other purposes. They don't do it for the revenue. They do it for some other purpose. Right? For the valuation, for other things. A lot of there is a lot of things behind the curtain.
Okay.
Okay, Kunal Oja, why 7 to 10% startup failed in first year itself? Reason because Kunal, no one is following the process. That is the only big reason. That's why we failed. We want to do it. I was watching one great movie yesterday. I don't remember the name, but I got very good sentence in that. It was a movie on the boxing or maybe on something on a sports. A coach is saying one very interesting line. He say, "I will teach you what you, and I will not teach you what you want. I will teach you what you need." That's a big statement and very important thing to learn from that two sentence. Normally, we are always focusing on what we want, and we always go and expecting that. A coach can really see that what really you need, so they can deliver you and give you what you really need. So what we are sharing here, we want you to really work on what we expect you to work. But the problem is we don't want to follow the process, and then we are trying to jump from X to Y, and we are not getting the results. So it is all depends because entrepreneurs are bit emotional people. They are more, and like we always mention, I always think like that. Most of the time we are majorly focusing on just creating a good product. We really forget that building a product is a one activity, one project work, and we have to completely detach from that, emotionally detach from that, operationally detach from that, and really think our role as a bigger, wider role to really structure that ecosystem to really convert and connect that all dots. Once you realize that okay, I can really do that, building that ecosystem and get the right connection for the company, you will find all the way. Even a mediocre project can convert into a great company because no product is perfect. It is need to be get evolved at the right time at right places. So market is changing, consumer expectation is changing. So you cannot say, okay, I have a great product and only that one product I can take it and run and build everything out of that. You have to consider this is done I just need to find right things for my product to take it to the market. So work on that. So I'll request on that. Just not only focus on the product and what great things you have. Better understand how you will reach to the people, how you will build your team, how you will build your complete that structure, which will be a foundation for your idea to really take it to the next level. So work on that. That will help. Maximum time we are facing that problem only, and only problem is that every time we are looking for a funding as a funding is considered as a ultimate solution. I always told that, at least in my experience, in my circle also, I have observed those who have managed to raise funds at early stage, they have made multiple mistakes, and they have really gone in a wrong way, because you get empowered to make mistakes easily. You have liberty to do that. So don't do that. Don't think like only money is the solution. Money is one of the options, one of the solution for you, but money should not be the only one point or one single factor to be really considered as a solution for you. Okay, that's a big subject. We'll take it separately. Okay.
Sir?
Okay. Yeah. Go ahead.
So in Google Form, it is given that kindly add file in upload, sign NDA and 1 minute promotional pitch.
Yeah.
What does it mean? Sir?
So NDA is non-disclosure agreement. So because since you people will come and present your all idea and everything on Sundays, this practice session. So we have given a non-disclosure agreement, which is already in the program. You can download the copy, sign it, and share with us. So your idea is also secured, and no one else also can claim anything out of it. That is one thing. 1 minute pitch, we are giving an opportunity where if you already have a ready business model or ready product, so you can create a 1 minute pitch to promote. Even if you want to promote your survey or any kind of an appeal for co-founder or anything, so 1 minute pitch, so you can share with us. So we will place that in our website or in our promotional activity, so you can take the advantage to alliance with another people, another members, and get along with them. That is purpose.
Okay, sir. Thank you, sir.
Yep. Okay. Yes, guys. Any more things? Okay. So I think it's 9:11. I hope all the questions are done. If we have any questions, please open up. Otherwise, we can call a day. Any questions, guys? No. Great then. So thank you for all your time. I appreciate people who come on time. I'll request everyone, please come on time so we can really understand everything in right way and take it for the best advantage. And again on Sunday 11 a.m. we'll meet again, and I'll expect that people will come with the presentations, with their ideas, with their challenges, and we'll discuss and have good brainstorming on each every part, so we can take the best advantage of this whole session.